You are listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy Byrne.
Hey, everybody. Welcome back to the Daily Gold Podcast. With me today is our favorite guest, Greg Weldon. Greg, obviously, a lot has happened since the last time we spoke. I don't even remember it. I mean, it feels like it was about 5 years ago. But before we get into gold specifically, maybe you could kind of give a big picture outlook, maybe for the next 6 or 12 months or so. What do you think the negatives are? And at what point do you think we could start to see things in the economy bottom out, and perhaps when markets could begin to sniff that out?
That's a lot to chew on right there, Jordan. I got to tell you, and it's what people need to chew on. So that's why you see this, degree of volatility in the stock market, in gold, in the dollar. I mean, the dollar to me is more volatile than anything. I mean, way more volatile in the stock market. Stock market's gone down. Dollar went down, up, and is down again. So we don't really know where that's going to end up. But that really is the key to all of this. But first, of course, you have to clear the virus. And I got to tell you, Jordan, I mean, I've been a proponent of every program and platform that Donald Trump has, facilitated, supported, promoted, introduced. But they did a terrible job on this virus. They really did. I think, Trump was in a tough spot. I'm not criticizing him because nobody wants to be in that spot, to be the person that has to make these kinds of decisions. But he erred on the side of caution in the sense of politically. And that is now coming back to bite us. And, it was a mistake. You could say in hindsight, it's easy to say it was a mistake. I was saying this back in January, for crying out loud, and I traveled to Vancouver in the first week, the first couple days, first 6 days of February, and I almost didn't go because I was like, this thing is coming. It's coming hard and fast. And I had prepped in terms of having enough frozen food and dry food and protein and so on and so forth, like till the end of April, because I thought I was going to come back and be facing what we're facing now. But the U.S. did not react. 52 days from the first case in the U.S. to when Donald Trump did anything, and the only reason he did anything is because the stock market, was screaming at him to do something. And that's his language, all right? Now, the Fed, also involved, misstepped at the beginning, all right? The way they had their first rate cut on a Sunday night when there was no need and the stock market was actually up, it's like, do none of these guys ever follow the markets? I mean, we know they have a whole market division in New York, but the timing and the execution of the first rate cut was awful. It was amateur hour, and they really botched it. They have since kind of, won back their credibility, frankly. So they've done a great job since then. And that gets to the dollar issue, which we'll talk about in a minute, because we're still on the virus. So see how you circle all around to talk about all these things, but you come back to the virus because nothing happens until that's clear. And we have pushed the timeline back so far. It's April already. I've had to restock like food and be exposed at times I didn't want to have to be exposed. And so to me, that was unfortunate. But to the degree that a state like Florida only went into mandatory lockdown yesterday, April 2nd. States in the U.S. are not even in mandatory lockdown yet. And if you think this is going to go away in the summer, look at Florida. No impact from the heat, and it's been record hot in the 90s here in Palm Beach County. So that, to me, has pushed everything back. And then there's the bigger picture. What is this thing? Where did it really come from? And what is the longer-term impact? How many real strains do we have? Is it 3? Is it 8? Is it 13? I mean, there's at least one. It had to mutate to get into human beings. So that's one mutation we can know of. We say there's different strains in Italy and the U.S., and that would seem to be true given the impact on the people based on age. All right. So this is impacting young people a lot more here in the U.S. The degree to which young people congregate more is part of the issue. And people were on spring break 2 weeks ago here in Florida on the beaches, and something like 40% of them now test positive. So it's, you had people coming from Florida, like 190 flights a day from New York, your tri-state area airports to Florida, for 2 weeks unchecked, people escaping New York. And I said to my clients, and I know this is a long answer, but it has to be, back in January, starting in January, when I was contemplating not going to Vancouver, that to understand how bad this would be, ultimately you only needed to say 4 words: New York City subways. And that was it, because that's now what's happening. And the degree to which this took longer to play out is because it took longer for the government to act, and now you have a much worse situation on your hands. You are looking at this thing going into the summer. I don't think you're going to be clear. I mean, if you can get clear by mid-July, that's going to be a phenomenal job, because we're just starting this in Florida. We're just starting. All right. Texas has even less cases. And it's like people feel that for some reason they're immune because there's less cases in Texas. And that's ludicrous. But my longer term view is, Jordan, that this is not going away anytime soon. The math would suggest you're going to return to some sense of normalcy, and what that's going to be will be determined, because it's not going to be normal as we knew it before this. All right, there's going to be a different normal. There's already some talk at the CDC, from what I understand, about people having to wear masks when they go out, like for the next several months, like into the fall. All right, so imagine going to a bar or a concert and you have to wear a mask, okay? But the reality is, the reason that they're saying that is because this thing, and I'm not going to call it a virus because it's not a virus. It just isn't. And if you look at the science around this thing, it's SARS. It's linked to SARS. All right, SARS-CoV-2 is the official scientific name for this thing, depending on how scientific you want to get. But the reality is that the math would imply, the science around this particular organism would imply, that pretty much by the end of next season, this time next year, everyone in the country, if not everyone in the world, will have been exposed to this thing. So the bigger question is finding an antidote. And I don't say cure. I say antidote because, again, to me, I could give you all kinds of conspiracy theories, and I'm not a conspiracy theorist guy. We know there's certain conspiracy things going on, okay? If there's any kind of crashed alien aircraft, they're not going to broadcast that on CNN, okay? Stuff like that, all right? Manipulating the gold market. People have always come to me, hey, oh my God, they're like manipulating the gold market, and these banks are doing this, and the Fed's over here, and this, that, and I'm like, they've been doing this for 35 years. This is what they do. I mean, you got to, So, in that vein, we know there's stuff going on, right? And if you look at the science around this thing, it doesn't act like a virus, okay? It acts like some kind of genetically altered virus. And that's really scary, that it's in the air, that it lives on surfaces. These kinds of things are not normal virus, SARS, MERS, Ebola, HIV. That is body fluids, So there's a whole different element to this that creates long-term uncertainty that we don't know. We just don't know. And the thought process is, too, if you want to get really crazy, and I don't believe this, but the odds are not zero. Maybe they're 1.5%, 2%, all right? But you can't say, oh, no way. There's no way that this is true. Where, this could be some kind of organism that's been introduced into our bodies for a reason, that there is an end game somewhere down the line that we have no idea what it is, and I could give you several scenarios of what they could be, right? But at the end of the day, that long-term dynamic doesn't matter right now. What matters right now is getting through this in terms of trying to, really manage the health crisis right now. And I think that has given the stock market pause. So that is kind of taking some of the pressure off. I think that pressure will return when this thing persists and everyone thinks, honestly, and I know this is a long answer, but, Donald Trump sometimes should just keep his mouth shut. I mean, why is he out there saying Easter? He's telling us how bad this is going to be, and we haven't, 52 days, he could have had millions of masks and millions of test kits, but they did nothing. I read a microbiology scientific journal entry the other day that was talking about this and said that the SARS-CoV-2 coming from bats in China, okay, was a quote-unquote ticking time bomb, all right? And it discussed all the intricacies around what this could mean for people if it ever got airborne. And it was a direct warning to governments to prepare to have the necessary emergency plans, at least in place in theory. The Pentagon does this. They theorize 900 times a day about war. All right, let's theorize about this because this is a war too, right? That article was published in the American Journal of Microbiology in 2007. Okay, so there's a lot going on here. Longer term, there's a lot going on here that's more nefarious than we know. As we can see what is in front of us, the bottom line is the longer this goes on, the more paper they're going to print. And you can't bail out every small business in the United States, let alone the world. Okay, so the math becomes problematic, but also spectacularly bullish for gold, because this is what it's all about. It doesn't matter whether it was a virus or some other, it doesn't matter what it was, because this was really kind of trending this way anyway. All right. German GDP had gone from real negative numbers to nominally negative in the fourth quarter. You see all the numbers, lower highs right through the fourth quarter. This was coming, whether it was a virus or a bank or, a market or some kind of other event, going on, whether it could have just been the political situation devolves into some kind of riots in the country. That could still happen. You want to talk doomsday scenarios. This thing keeps going on, and all of a sudden trucks aren't bringing the same amount of food to grocery stores. Then you'll know why in March the top selling item in growth year over year was not toilet paper. It was shotguns and ammunition. So, that's a lot to chew on, I know. But the bottom line, if I could make that ridiculously long answer very short, it is the longer this goes on, and it's going to go longer than we even think, and potentially really long, the more paper they're going to print, the more bullish it is for gold. And that's why, we think what we think in terms of where gold is going.
Okay, I don't disagree with you, but let me give you a counter argument or just something to question. Now, with respect to gold, but more so like the gold stocks and silver, because they've been underperforming forever, it seems like. If the economy is in recession for a long time, for let's say the entire year, obviously, gold can do really well, but in that scenario, won't silver and the gold stocks still struggle and kind of underperform gold? That as a precious metals bug, that would be, I understand that, gold is a little bit on its own and, will do great in that scenario. But what about the rest of the sector, the things that need more interest and speculation and inflation to do really well? How can those markets perform like they're in a bull market if everything is just going to be like this or completely slowed down for a year?
Well, the answer is they don't. That's the simple answer. And they haven't. Look at the gold-silver ratio. It's at a new high by a factor of 25% in a matter of a couple of weeks. So, the fact is that's exactly what's happening right now. Look at platinum. Look at the mining shares. Look at the silver mining shares. I think you will have periods where they do very well, because you also, you have two things going on. It's a tug of war right now, really. And it's on the one issue, and when all of a sudden gold got hit, it got hit because there was questions around the actual solvency and creditworthiness of the energy companies, which spills over, of course, right into mining is the next thing you're going to think of. Energy, mining, boom, right? So you saw the mining shares got just wasted, man, all right? So, and big time. When the entire rally that we've seen got lost, it would be similar to gold going all the way back to 1,200. So that's happened, that's happening, and that probably continues to happen. You'll have pockets where it's not true, but that's why we're focused on gold, Jordan. It really is. Normally we'd be in the mining shares, and we had the SIL. You remember we swapped from gold to silver when it became more of a monetary thing for the Fed, when they actually shifted gears on policy. That was when silver picked up, and you had a big rally in silver. So we've kind of caught these things pretty well, and I don't see that changing the way it is now, which is actually what you just said, is no, they don't act well. They don't have to act well, and it doesn't look to me like they will act better than gold anytime soon.
Okay, so with that said, sticking with gold, let's talk about the COT report, because there has not been that much or that significant of a decrease in the net speculative position. However, open interest has really, really come down quite a bit. So, how are you reading the COT report, and how does that inform your near-term outlook for gold?
I tend to want to rely much more on the open interest. Frankly, to me, this market has been purged to some degree. If you look at other factors like the on-balance volume versus the actual trading volume, stuff like that. All right, you see liquidation. You really do. What's interesting is that liquidation continued into the rally. So it looks to me like you had a situation where you had enough. Some speculators got short and got out. I don't even know if it was quick enough for the COT to pick up on it. Now, that's an over-dramatization, but I think you understand kind of what I'm saying, is not to read too much into that, because the decline in open interest was huge. I mean, actually, it's funny. I have a chart of it up as we speak. I mean, 800,000 at its peak. All right. And, now it's at 525. I mean, that's massive. And, some of it's commercials. Commercials were heavily, involved in this market, too. And the rally might have been them dumping some of their short positions. All right. Because they could have been caught short. This could have been a squeeze on the commercials. So you got to watch the commitment of traders because it's not black and white. Because there's a large spec position is not necessarily a bad thing, depending on price, availability of material for immediate delivery, on the swaps, and then on what are the commercials doing, thinking, and what are their positions. And commercials were more heavily short than these specs were long at the peak here. So keep that in mind, and I think that has a lot to do with it. To me, you had enough of a purge, and you see it particularly in the mining shares, even though they outperform in a big way to the downside, enough so to clear the deck that it's not prohibitive to being long, which it was at the peak. So that's the answer to that question.
Okay, so sticking with gold, what the heck happened on those 2 days where gold went from 1480 to as high as 1700?
Well, theoretically, that was short covering. I mean, if you look, open interest fell in those days. So that suggests that the thought is that you had some of the specs came in and got short on the break. I mean, you broke the 200-day moving average, you broke an uptrend line. The ascent had been pretty steep angle. So, it looked worse than it was, okay? It was only, a 38% retracement of the rally off the lows at 1050. So, big deal. Everything else went to 61 or beyond. The fact that gold held actually above its 38% retracement is phenomenal. So, you need to take perspective on this and look at the longer term. And, short term, it was nasty. Short term, the volume, the volatility was way up and the swings were unbelievable. Frankly, we felt it coming. We got out of our long positions before the one big down day after the second peak. All right. And then we got back in, when it went right back above the 200-day moving average the day before it took off for 2 days. So, and some of that's luck. But some of it's, 36 years of doing this and seeing these kinds of things before. And to me, it was a bloated market, which was vulnerable to if the stock market goes down again and it becomes a credit issue. And I don't mean credit market. I mean credit, like loans and, the credit ratings of companies and their bond, their credit default swaps and all these other things. All right. And in that case, then you also had at the same time the issue around the dollar, where the basis swaps in the dollar skyrocketed. All right, and all of a sudden it's like, this is a dollar shortage, the exact thing you fear. And I said to our clients, I go, the Fed cannot allow this to happen. It would be the biggest policy error of all time since the 1930s, to let the dollar go through 104 into new highs. And what did they do? They come out a couple days later and basically say, we will provide the globe as many dollars as it takes to prevent that from happening. And you better believe they will do it. And all of a sudden, the basis swaps pancaked and are actually lower now than they were before this whole thing started. So that's kind of out of the way. And when you think about all the money they're printing, open interest, the open interest dynamic changed and changes when they print so much money. Because now 800,000 of open interest doesn't represent the same amount of money relative to what's out there. Do you follow what I'm saying? So it's a smaller position because the pool of money is much bigger already. Trillions from the Fed, from the Treasury, and just the U.S. Think about this on a global scale, man. It's huge. And every day, one of the things I do is I cut and paste headlines for my clients. And every day it's another country doubling their stimulus package, another country announcing QE. New Zealand announced it a week and a half ago. They've never done QE. And they announced QE that's more than 10% of the outstanding bonds that they have. Then you start to look at the number of countries, Jordan, by the way, whose gross external debt, not just sovereign debt, but gross external debt exceeds 100% of GDP. I don't want to, this is not, I'm not trying to, whatever. I would make you guess, but you'd never guess. It's 40 countries. And we're going to print trillions and trillions of more dollars. And what happens? The gold starts to rally against all currencies. The amount of money that could come into gold swamps whatever's in there now when open interest is even as high as it was. And now you have the setup for that. You didn't have that before, and now you do. So the open interest takes a much lower, and the commitment to Treasury report, it really goes down the scale of things that are pertinent right now.
Okay, I do want to ask a follow-up to the dollar, but you mentioned gold again. So let me get back to gold. Gold, I mean, it's obviously the grandfather, the godfather of precious metals, as some people say. But then with all that said, what is it going to take to see silver, the gold stocks, and platinum start to perform well like they're in a bull market? I mean, is it gold reaching a certain level, or is it just events on the ground?
Well, I might have said it was gold reaching a certain level, so this is a good question. But that, palladium has blown that whole thought process out of the water, because you would think at some point platinum would be worth something if palladium is going to be $2,800 an ounce, right? So no, and let alone what rhodium is doing. Okay, so no, there's not a level in gold anymore that matters. This is a new what do they call it? A new paradigm. I mean, it really is. Everything's different, and it's not different because of the virus. It's different because of the situation that's going to come out of the virus that would have come from some other thing, if not the virus. So, and again, the mismanagement makes it that much worse. So now it's a big deal. And, it just, again, I think for silver particularly, because that would be the next one to go. All right. And I will say this, just to back up, because I'm not saying that, the gold and silver mining shares are going to go down, or they're going to be, in a bear market or act poorly. All right. I don't necessarily think that, because these are operations that are pretty contained in terms of geography and physically. All right. I mean, you put a bunch of workers out there for 3 months, they might want to kill each other by the end of 3 months, but you can contain them there where they can work. We'll come to a point where we get enough people tested. We'll find out who's healthy, and those people can go back to work. All right. Then the question is, how about the people that test positive but never got sick? All right, not to come back to that, but this gets to the question about the mining shares, because it's important, because it doesn't impact the mining business that much, relatively speaking, outside of the credit issue, outside of the ability of companies to, sustain. All right, but assuming they can in the mining companies, and that's a big question mark, and I think that's going to be key in terms of if the mining shares are going to come back, not all of them will, and the ones that have more staying power, the bigger ones, the accumulators, will start to pick off. And that could be a real bullish situation where all of a sudden, you're not so worried about credit. You have healthy workers kind of coming back. And this could be, August, September, October. I mean, 6 months from now. All right. But it will happen. And at that point, if gold is still up, and this is a thing where, gold is not going to come crashing back down to earth, you could see a really strong rally in silver and the mining shares. But that is probably 2 steps away still. And I think we'll have plenty of time to see that start to emerge when it does.
It just seems like the answer has to do with the virus, and there's no way. I mean, there's, at least for me, I can't. I like to look at markets and see if there's a tell here and there. But I'm sure it'll give some kind of a tell. But it just seems being able to kind of have the foresight or to project that is going to be really difficult.
Yeah, it will be difficult. I mean, you're going to have to stay on top of it, and I think there's going to be false starts. That's going to be the problem for the stock market. How many false starts until the stock market gives up the ghost? That's the bigger picture question, really, in terms of markets, that is more applicable to any discussion. I mean, okay, you start with the virus, all right, but then we talked about the dollar, we talked about gold. To me, those things are pretty. There's risk to everything. Of course, you could get a collapse, a depression, and gold goes down just less rapidly to a lesser degree than everything else. All right, that is certainly possible. That's always the risk to gold. The risk to gold is you got some kind of run on the dollar and gold gets tanked. I think in those scenarios, people are not going to want to liquidate gold to get dollars. I think that was purely a electronic financial era dynamic with kind of margin calls and that kind of thing for investors. If you get to the worst case scenario, it's really about the stock market. And if you get this, you're going to get the situation where it's going to roll. It's going to roll now. Florida's going to be the next New York, and you're going to see New York numbers improve, and that will give some hope. That maybe keeps the stock market sideways, but Florida's still going down the tubes, and you have a lot of old people down here, man. So that could be a problem. That's just the truth. All right. So But they are also recovering. I know a 91-year-old, my buddy's father-in-law, father-in-law, 91, and he was in the hospital on a ventilator, and he recovered, and he's home, felt healthy. So, this is a weird thing going on. But staying on point, because God knows we've been off point a lot today. But it's fun and it's intriguing, and the uncertainty makes it very difficult to handicap, like you just said. But I think you will see it, and I think you will see it in the employment numbers. I think all the things that are tanking now will start to creep back, and that's not going to happen until it actually happens. It's not like you're going to see employment rise because people think you're going to be clear of the virus. Employment will start to rise when people feel confident they are clear of the virus, and that's why it's going to take longer. So the question is, can the stock market weather the storm? I think the answer to that is more no than yes. That poses more risk to gold. But in that case, it could be such a fervor around kind of the anxiety that it creates if the stock market takes another dive and makes new lows, that could cause a rush into gold and could even benefit the mining shares. I mean, you kind of saw that for a period of time just before the credit worthiness issue and the corporate solvency issue came into play, and you saw muni bonds getting hit, for crying out loud, which is a whole nother story, by the way. So.
Okay, but if we're looking at the big picture, a couple years out, we get a vaccine, maybe we're able to recover. I mean, I don't want to put words in your mouth, but you'd have to think that silver, the gold stocks, platinum, other things that have been completely bombed out are just looking at some insane moves to the upside.
I don't disagree with that, but I also have to say, right here, right now, that's more applicable to some of the energy shares. I mean, not to change the subject, but what you're mentioning is a step or two away. Energy's right in front of us because it's discounted so much that it could be value here. It's discounted. I mean, look at gasoline. It went from $2.30 to 50 cents. I mean, holy mackerel. Now, look at the price decline. Do you really think we're going to see that degree of decline in consumption? Yeah, temporarily, but not longer term. All right. I know people, and this is something I may have to do this weekend, just to get out of the house, get in your car and drive around. I mean, there's a lot of remote areas around here you can drive around.
I was thinking of doing the same thing, actually.
Yeah. So, you're in a situation now where gasoline's gotten so pummeled, the swaps are ridiculously cheap. I mean, when you're talking June gasoline is like 20 cents, 30 cents below December. That is to me is just like, back the truck up, man. I mean, so we bought gasoline earlier this week. In fact, that's one of our newer trades right now. And a couple of the gasoline stocks, a couple of the energy shares. I mean, you go out there and pick up stuff like Halliburton for $4, Schlumberger for $3. It's like buying it was like buying Kinross at $2.50, where it's basically a call option. Just buy it. The amount of money you want to risk is the amount of money you spend to buy as many shares as you can. There's no time decay. There's no expiration date. It's a beautiful play. All right. And you have that in some of these energy shares. And I think ExxonMobil is another one, So does that come to mining shares? It does. But that's a couple steps away. And I think the interim risk is still greater there than it is in energy, because energy was already on the decline just from the secular standpoint of, if the Democrats get elected, they're going to prohibit, gasoline-powered vehicles. So, and I'm being facetious because, of course, that's what they want to do in spirit, all right, which is ludicrous. You don't have enough nickel, first of all, nickel sulfate, to make enough batteries, to make enough electronic vehicles to replace all the gas-powered cars in the first place, all right? That's a whole other story. That's quite bullish for nickel, but longer term.
So I guess the last thing, just on the general financial risk that you're talking about and the market making another move lower after this rally, is there some kind of a tell out there? What should we be watching that can flash warning signs about that?
It's keeping your pulse on the anxiety. I mean, I know that sounds trite and like a kind of a bailout answer, but it really isn't. I mean, to me, it's a vibration. You can feel it, and I don't know how much you know about frequencies and stuff like that, and Schumann resonance and electromagnetism and astrophysics. But when you kind of look at part of what's going on here, there is an element of that at play here, all right, and it has to do with frequencies, and it has to do with the frequencies at which this virus dies. Okay, so there's a lot of research being done right now in Italy on this, and they have found that this virus dies at a vibration, a Schumann resonance index, which is geoelectromagnetism and basically vibrations, to make it simple, of 25.5 hertz, and the virus dies. So there's a lot of ways you can, kind of circumvent that, frankly, on your own. So, in that vein, I mean, I'm kind of going off on a bit of a tangent. What was the question again, Jordan?
Well, this is all very educational.
I love talking about this stuff.
But I love hearing about it. But I guess any kind of leading indicators or anything that we could watch that would flash warning signs that the market could make another move lower. We could see other CDSs start to blow out, et cetera.
Yes, there is. There's one key one that's really simple, actually, and it's one everyone will be watching, and that is maybe two of them. But I think the first and foremost is a drug, one drug that is new that will basically speed up the recovery time. When they get that, I mean, vaccines. Jordan, you'd have to put me in handcuffs and a straitjacket to put that stuff in my body. It's not happening. All right, I've never had a flu shot in my life. I think the whole idea is ludicrous. I really do. I understand that, it does protect some people, but at the same time, putting a disease in your body so you can build up antibodies, does that not sound like, bloodletting from the medieval ages to some degree? It does to me. But at the bottom line, when you start to get a company that's making, screw the vaccines, that's so far away. You're talking next year until you have a vaccine. And by then, everyone's exposed, so who cares? The degree of people that will be exposed, a vaccine does them no good. And you're going to vaccinate the other half of the people, maybe, but at the same time, you don't know how many people are going to be infected by then. It could be a lot more than people think, especially if you can walk around and not show signs of it. Just go on your normal daily life with SARS-CoV-2. But the other one would also be just a real pickup in the recoveries, because you're not seeing that yet because it's too early. So we had the first guy in Jupiter, Florida, that got sick was March 15th. He finally checked into the hospital. And this is actually a good story. And this is a hopeful story because, it's hope, it's empathy, it's caring, it's unity while separate. And I think that's really kind of cool. But you also have people that don't adhere to the protocols, and that angers people now. And that's good. It's kind of peer pressure. I'm not saying it's good from the sense of the government, repressing us. I'm a libertarian, so less government's always good. But in this case, the government's job is to protect us from stuff like this, whether it's real, imagined, engineered, or natural. All right. So when you get back to the fact that you start having people recover and like, hey, I want to go back to work. I'm fine now. I got sick and now I'm fine. I'm over it. That will be interesting to see how they handle that. The case in Jupiter was a 44-year-old man. He got sick on a Sunday, just started feeling ill. He's at home with his wife and his two kids. Stays home all week, went steadily downhill, fever's going up, he's not feeling well. Come Thursday night into Friday morning, he couldn't breathe. His wife insisted on taking him to the emergency room. They went nuts, of course, with all the protocols, and quarantined him. They tested him, and he had it. He was sick from the SARS-CoV-2. They gave him a whole different cocktail of drugs. It didn't work in through Friday into Saturday. Saturday night, he basically stopped breathing. He could not breathe. They put him on a ventilator, put him in ICU, gave him some other drug, and by Sunday night, 24 hours later, he was coming out of it. And by Wednesday, he was home, okay? And his wife and kids for the past 3 weeks, two different tests, have tested negative. So that's a story of hope. It's also a story that should scare the shit out of people because we don't know what this thing is and what it is capable of doing, especially if it mutates. There may be a sense of I'd rather get sick early, so theoretically I can't get sick again, although that's not necessarily true. But the CDC is saying they believe that will be true with this virus, and whatever vaccine will kill all the strains, and they're going to attack the thing that is common among the strains, of course. All right. But if you're in a situation where, just trying to regain my school of thought there, in terms of, not knowing what it is, if it mutates, all right, we get a drug that starts to treat it, okay, and it mutates and it becomes drug resistant, and then all the people that get sick, maybe the death rate is a lot higher. That's something you got to think about. So, man, that's where the vaccine does come into play, I guess, if you really stop to think about it. I just think the timeline is too short for the vaccine to really make a difference. They need to find something that treats this because, to me, you're going to have so many more people. You're not going to be able to prevent people from getting sick. You're just not. Even when you go back to what is going to be considered the new normal, all right? I mean, are people going to literally wear masks everywhere? I don't really see that happening. People want to get back to normal already. Nut jobs down here in Florida want to go out this weekend, for crying out loud.
Well, on that note, Greg, before I let you go, back to gold. I know you have a new service. We've talked about it before, gold-guru.com, a gold-specific service. You have a special offer for our audience. Why don't you explain?
Yeah, we do. It's actually, so we just finished this massive piece, which I described some of. But when you see the charts, when you see all the details, all the numbers, the math is really what makes this so just eye-opening and jaw-dropping when you talk about the paper just in the U.S. So it's called 2000 in 2020, which is gold's going to make new highs this year, and how to best play it. What the tells are going to be to look for, in terms of how this could really get parabolic as it relates to the dollar specifically. All right, so it's 2000 in 2020, and you can buy that. It's $29.95, and that would then get you a credit of $30 to the first month of Gold Guru, and that's gold-guru.com, where it's $60 a month. So you buy the special, you get half off your first month of the Gold Guru. And I think we're going to post the link on your site. The post will be posted on mine at weldononline.com, WELDONONLINE, weldononline, one word.com. You're going to post it on your site. I'm going to tweet it. You're going to tweet it. And it's the link that will take you to where you can buy this video and PDF and then get the code that will open up your half-price offer on Gold Guru.
Okay, Greg, well, I'll definitely get the info out to my audience. As always, I thank you for joining me. Very informative and educational as well, and I hope we can do this again in the months ahead.
Yeah, for sure. There's going to be a lot to talk about, and I'll tell you, I'll leave you with this. Okay, I'm going to leave you with one thought process that everyone should think about. Okay, and this is in the special. I'm going to give a little bit away here, but that's okay because I think it's this important. Okay, it's not really about making money all the time. It's about helping people. And in this case, all right, what's going on astrophysically, okay, is the solar system orbits the black hole at the middle of the Milky Way. I'm not sure, and most people don't even know that. It's a 228 million year cycle, right? Within that cycle, there's other orbits going on, all right? Within one of those cycles is 25,800 years, which happens to be, based on the Mayan calendar. Mayan calendar is actually based on the orbit of the solar system. So I did my senior thesis at Colgate University on this, and now it's coming to the fore because what has happened in the last really 5 to 7 years is our solar system, and it's not fully there. It's like just Pluto is just coming into it now, all right, has moved out of the constellation of Pisces and into the constellation of Aquarius. There are 12 constellations that our orbit on 25,800 years takes us through, 2,150 years in each of these constellations, all right? Pisces is a low-frequency area of the Milky Way, all right? Aquarius is a high-frequency area. You see it in that to simplify this, the vibrations on the planet Earth, basically the crust of the Earth vibrates, all right? It's pretty steady they can measure this stuff based on geological things that they can do going back, since the time of Christ and since, the last cycle started the age of Pisces. 7.83 hertz was the steady vibration of the Earth, okay, of the ionosphere, of the geomagnetic electrical force on this planet, which also happens to be the same exact geomagnetic vibration of your heart, okay, 7.83 hertz. But this has all changed because we're in the Aquarius age now. Frequencies are going up, all right? This is why you have record heat and record cold, record floods, record drought, because everything's polarizing. The frequencies are expanding, and each ends of the spectrum are intensifying. What does this matter? It matters because what it means is volatility is going to rise. It's going to keep rising, and it's going to get really, really high in everything. Now, central banks have done a phenomenal job of basically eradicating volatility from the asset markets. They will not be able to do that anymore, not only because physically, in physics terms, it's going to become more difficult, but also because the math is prohibitive when you have so much money. To get the same bang for your buck, you got to keep printing exponentially more. There comes a day when that doesn't work anymore, where the emperor has no clothes. And I think right now we're on the cusp of all of this kind of converging in a time-space dynamic that is really intriguing, interesting, and frankly, it's going to be a wild ride with a lot of opportunities to make a ton of money. The one thing you want to make sure is that you maintain the value, the purchasing power of that money, because right now every country in the world is debasing the purchasing power of their own currencies.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to thedailygold.com. And for premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.